Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Woohoo! Party! Today is Tuesday, and actually, we're in our Tuesday, the 12th of May. Remarkable how we're almost halfway through this month, eh? Oh boy, no doubt about it. Very intense conditions we're living in this world. And unfortunately, as you guys have sort of seen recently, I fully expect two more major sort of, oh my God, events here for 2020. So it's going to be a bumpy year, right? Just cool your jets, go slowly. And if anything, as I've often repeated, for people that do actually really want to be quote unquote traders, take advantage of this time. It's a great learning experience. And invest in yourself maybe. Right? Think about how can I come out of 2020 smarter, stronger, better positioned to kick ass in this next greed cycle coming up. Because I'll tell you, if you can think out like 10, 15 years from now, man, there's going to be monster bull markets. And I actually think within crypto, we are going through the final bottoming phase. Actually, we spent a lot of time. We had a great presentation by one of our TRI OGs and my right-hand man here doing the videos on the site, the Daily Briefs and the Daily Brief Recaps. Kevin came on and chatted with the community today, just telling what was on his mind. And actually, one of the ideas that he talked about today, I'm going to share with you here today, because I actually think this makes a lot of sense right now. If you can position yourself, man, next 5-10 years, oh my goodness, there's so much. Think of think of 1918 Spanish flu, basically the same thing. And I've watched some documentaries on the Spanish flu. It turns out actually it was much, much worse than what was sort of ultimately reported to our generation. But point of the matter there is that actually set the groundwork for what we call the Roaring Twenties. So I'll tell you, I can see all the groundwork being laid that, once we get beyond this crisis, get into the next greed cycle, the economy starts rocking and rolling, whatever the sort of monetary base conditions are, we're setting the stage for a huge bull market down the road. So, with that said, one thing I'll say before we really get going in earnest here with your guys' presentation is, we had a very, very good intake. You remember we had the raffle. That was a lot of fun. 100 plus people entered the raffle. Very full school term. And actually, in fact, we're sort of debating whether we want to add a second class to the level 1 because there's so much demand. We have been at TRI actually not really that aggressive in sort of marketing TRI. And we have been sort of mulling over how do we approach this. TRI is in a very good position. I think our balance sheet, of course, very healthy. We have a lot of respect in the community. We have a very full student roster list. We're not in a position where we desperately need business, which is good. Thank heavens. Thank you, Jojo. Thank you, universe. Thank you so much, God. But at the same time, too, this actually might be a good time, since we don't need to, it might be a good time for us to sort of dip our toes into sort of professional marketing of the site. I think definitely the school's at the point where the amount of students that we've put through the program and the amount of reviews and the type of reviews that we're getting, I think we're ready. But the problem that we've had at TRI is that, we're trader dudes and stuff like that, not really marketing experts. Turns out one of our students that was at TRI for over the past, I guess, three or 4 years, turns out he is a marketing expert, and he's been sort of saying, guys, you're ready to start taking the next step. So what does the next step look like? David is our marketing consultant here, and our next step in his eyes is a promotional campaign. So, FYI, anybody who's an old TRI site student, site member, you might be getting just polite emails. Why don't you just pop in and just, take a look at the daily brief, take a look at the site, and see what we've done. So we might be seeing a lot of those kind of people coming back into the fold. But also, too, David has where did I put it? Right up at the front of our front page, right at the top, we're calling this the Market Madness Deal. And you see, very typical marketing kind of thing. We have a countdown clock, all that kind of stuff. And we just like to see how this resonates with the public. The page that David put together is just, I gotta say, it's absolutely beautiful. It really articulates very well the value package. Like, we just haven't done anything like this in the past, and it's just so beautiful. If you are just curious, you don't necessarily have to join or not. I mean, I think the package deals that David's suggested that we run here are very attractive. If you are interested, Julian has said that he is our point man on the site, so use him. And maybe even if you do have specific questions, you can add him in the comments fields. If this comes across as too shilly, just my apologies right away. We're certainly not trying to really shill and promote and really pound the table, hard sell. That's not the purpose of this. But I have to say, David has really put together a fantastic reference piece here. And even I went to Europe a couple of years ago and interviewed a lot of students in person. And I would even suggest just taking a few minutes and watching the video. I mean, like I said, I have to say, David has put together a beautiful presentation here for you. So we're going to be running this through the week. And the long and short of it here is it's our first foray into actually marketing TRI. So we'll see how that goes. If you can benefit from any of this, great, awesome, love it. Please understand, TRI has a management and, given price inflation around our society, we have agreed that we are going to be raising the price points on our education programs going forward. So you should understand that if you wait, 6 months, whatever, to consider taking the school, you're probably going to be paying a higher price. So just be aware of that. Okay, so I wanted to mention that. I'll just do a quick little sort of reminder through the week. It's only a week long. After the week's done, I won't mention it anymore. But nonetheless, I have to say, David, if you are watching this later on, it's absolutely beautiful. It really is. Really touches me. Way to go, dude. Okay, so market commentary for you guys. Dashboard's still sort of building itself out. Sjord's working on stability issues for the data feed, because we actually ultimately, by the end of the year, we have a goal that we will have an auto trader up and running, and that will just be trading away. We'll pick an asset like Bitcoin or something like that, and it's just going to be doing its thing. So Sjord has told us that he's at the stage where he can actually start seriously considering doing this now within the next 6 months. So super stoked. And of course we got the screeners and stuff all building out, so lots of development going on there. Looking at your guys' message, I like to keep the message relatively simple for you guys. We don't want to overcomplicate this. Of course, as I had said earlier, each and every day of the week I like to bring on different people on the daily brief. Today's daily brief, I think, was about an hour and a half. And just get many different perspectives. Remember, when you hear from Brian through these presentations, it's just my perspective, and one of the real benefits of TRI is this whole community approach. So as I said today, we had an awesome presentation by Kevin talking about Masternodes. Are you interested in Masternodes? Have we completely forgotten about Masternodes? And I thought Kevin came up with a very interesting study suggesting that we can actually try and figure out cost of production for Masternodes and where value might be for these names. So those are the kind of value-added services that we just do on a daily basis here at TRI. Okay, so looking at your sheet, and of course we've talked lots about this recently. Oh, not that. I don't know why it always does that. I gotta hit the right button here. There we go. US dollar index, to me, this thing looks like it wants to head higher. We talked yesterday, were we going to get a nice solid close above here? This close came off a close. It wasn't at total double bottom. It's interesting how right out of the gate first thing this morning, that high from 3 days ago was 140, and we traded up to 144 this morning. So there are rumblings, and I even put tweets out about bots and stuff like that. I mean, this is a trader's life. The levels have come in. I do actually like a nice stab up top. You don't know what's going to happen. I've walked you through a lot of these trades day after day after day. You don't know what's going to happen, and it's quite remarkable just to watch these damn things play out. So I kind of am leaning towards the long side for the US dollar index. And until we actually break through these key lows, my bias as it stands, because this W just came in here, is to the upside. We'll see what happens. Only time will tell. I mean, you could make the argument there was a big M that came in here. But the problem with that M was that it was around a holiday event. So I just don't know whether I actually believe whether we really did M out here or not. Having said that, what's sort of the bigger picture kind of news going on? It was interesting to see that the U.S. Senate had video conference calls with self-isolating medical experts down in the States, and lots of controversy over what the sort of leadership, the message coming out of the top of U.S. government actually is. I'm hearing a lot of conflicting messages, a lot of confusion. And then, of course, the recent announcements that COVID virus is in the White House, that certainly didn't help the situation. So, lots of confusion, lots of, hey, we want to open up, we want to open up. If in a week or two, like I said, I'm thinking, and actually maybe I said this in the daily brief, but I'm thinking that maybe we're okay here through May, and then give it a week or two, we open up, and then all of a sudden the cases start ramping up again, and, here we go. I guess suppose for here I'm thinking uppy. Risk on, risk off. That's sort of this conversation. And I have been, I've had this on the screen for a while because I still think this is what we're doing here. We have now done the right shoulder counter trend rally, so that almost happened like on cue. I've had this head and shoulders image on here since we were over here, so quite shocking how well defined that counter trend rally and now potential failure is at this shoulder level. And then, as I've said repeatedly, I mean, I don't know whether this AB equals CD plays out, but I definitely like the idea that there is some sort of catalyst window coming up here the end of June, beginning of July. And we all know seasonally anyway, the month of June is a horrible month in the stock market, right? They always say sell in May and walk away. So who knows what the hell this is going to look like. I don't think it's a good idea to get into the habit of predicting the future. But anecdotally, we know that there is a certain gentleman. In fact, Kevin was showing us on the Bitcoin chart. It's ridiculous how often this son of a gun stops markets. So there's good old 61.8, and what a shock. Here we are banging up against the top end of the range. And everybody should be looking at this chart and going, gee whiz, I bet you that's a reload zone within that range alone. So what a surprise. We rally up into the top end of that range, and now we're starting to roll over. I would say the stock market's going to break if we start taking out like these kind of trend lines. So it's not here yet, but keep your eyes peeled. We're getting closer, and this could also be a nice little fractal empire top there. And of course, we all know that Bitcoin's already topped out and starting to head back down and calming down. So if we were thinking Bitcoin as leading index, Bitcoin's not going to help the stock market now because it doesn't have any fundamental driver in front of it. So that's sort of your risk on, risk off conversation. Everybody's just sort of treading water right now. And like I said, oh boy, US dollar's starting to think pointing back up. This guy here's starting to think pointing back maybe down. It's probably a little bit early. But I do like the idea though. I don't know what this trough is going to look like, but I do like some sort of pullback here into the end of June, beginning of July. We will see. Only time will tell. Maybe it's going to look something like that. Who knows? Oil market, as I've sort of said here recently, I would actually like, and I think it would make a lot of sense, for this oil market just to calm down here and just settle down. And especially if we're thinking, sell in May and walk away. There's probably some sort of seasonal pivot on the oil. And of course, we got this stupid, insano, nutso candle here. So it's extremely difficult to interpret anything in the oil market right now. I mean, this thing might be bottoming out higher, but considering seasonality, I don't know that that makes a lot of sense. And of course, before, like I've said repeatedly here recently, I'm not even really interested in the oil market anymore. So, good old bonds just going sideways. Now we might have sort of seasonal impetus to hold this floor in. We know that the econs are absolute train wrecks, so the bonds are going to like that. If the oil does top out and starts working down, then I think the oil's going to take off, or the bonds are going to take off here. I think you can actually make the argument. Remember, we've been talking recently how there were long setups and short setups. The way I look at the bond market right now is this is actually what I call a narrow, and actually I learned this like 30, 40 years ago, so it's certainly not new. This is actually what we call a narrow sideways channel. And you're just going to, the trader just simply is going to buy on a break above the top of the channel, and they're going to sell on a break below the bottom of the channel, and then their stop will be the exact opposite side. So actually, those people that are interested in option strategies, this would be a really good example of a straddle where you could basically buy a call. I mean, whatever the resolution of this range, it's going to be big. They often say the longer the channel, the bigger the run. So, here's a good example where you could buy a call, buy a put, and, as long as you get a nice big expansion in volatility and some serious price movement, you could probably make some money with this, what's called a straddle. So that's kind of what I'm thinking there in the risk on, risk off. I'm not really getting any clear signals either one way or the other. And kind of the same thing in gold, right? We're just sort of, remember we talked slick traders coming in at the bottom end of the range and buying. Could we W out here? So the jury's still out. You'd really like to see that gold price up above 1730, 1740. And I think we're off to the races. But for the time being, cool your jets. What's really interesting about the metals market is I actually think silver's trying to perk up here. And I've been showing you guys recently, actually I don't know whether I've been showing this in public or not. Definitely on the site we've been talking about this. But I got a really interesting setup forming here in silver. My bot setup. And what was really interesting about this is I've been following one silver stock for a very long time. Kind of off topic here, but I'll just mention it for fun. Great Panther. And you can see that very similar bot setup here on GPR. As I've sort of said to you guys before, I'm not really interested in investing in gold and silver, and I'm not interested whatsoever in investing in oil. But hey, a trader's got to trade. And if I get presented this very polite trade setup, I really wouldn't be doing my job as a trader to not take a trade. So anyway, long and short of it here, live by the sword, die by the sword. I'm getting a half decent little buy signal on a nice break above that 70 cents there. You can see she zipped as high as 77 this morning. So I went and threw my bid in at 71. We'll see if I can join the party. Looking for a $1.14 to the upside, and I'm willing to risk against 61 to the downside. So, it is what it is. Trader's got to trade. So interesting. Gold not really doing anything, but the silver might be presenting something. And I suppose if you still believe in this gold bullish inverted head and shoulders, nothing's really changed here. And you might argue there could be bottish type setups in the gold, and if we start ticking up through here, away we go. But I haven't got anything on the gold market right now. But like I said, I did find something in silver there, and so I'm actually working a bit. Go figure. So there's your sort of risk on, risk off. I get the impression everybody's just sort of waiting. Everything's in just sort of a wait kind of thing. We'll see how it goes. Risk on, risk off, specifically in the stock market. We've talked about this recently, right? Risk on, stock market breaks out through the top here. Away we go. Woohoo! You'll see this Russell 2000 tick up through these highs, and then we know that the junior bull market's still rocking and rolling. If we M out here, then you'll know, that's the end of the seasonal rally. We did just put in a little inside bar here on the Russell 2000 versus the Dow. Actually, no, I don't think it is an inside. No, it isn't. Sorry, beg your pardon. Maybe potential fractal here. No real clear signals. If anything, today itself is an inside bar. Nothing really definitive out of this other than kind of like, what we were talking about, reloads, short zones. This would be a very esoteric thing to trade, spread. But nonetheless, what a shock. We failed in a reload zone. It's quite remarkable how this shit works. This is a spread between the Russell 2000 and the Dow. Why is this working here? It's crazy technical analysis. And really, again, what it really is speaks to technical analysis, speaks to just what this really is it's a reflection of human psychology. Anyway, that's another conversation for another day. As you can see, we got a bit fortunate here this morning. One of our little penny stocks that we picked up on the big dump. This one I happen to have gotten along off of this 180 level. Interesting level. This is probably more like sort of little old lady kind of crap. I could see nice little double bottoms, but those double bottoms got broken. So it's kind of like if you were trading this, then you should have walked away. But notice another W came in here. Classic Linda Bradford Radke would always tell me when I asked her, how many times should you consider taking a trade? And she'd always say twice, because the first time might be an FU. This was macro driven. It really had nothing to do with the company itself. Then the macro sort of cleans up, and then we get back to company business, and boom! Now, in this particular case, under normal circumstances, I would have just sold half, thrown the stock on the pile, and forgotten about it. But obviously with this huge gap, that's not going to be, in my opinion, sustainable over time. So when we woke up this morning, we saw it trading pre-market like 460, 470. It was going to gap open. I was just like, you know what? I should probably, number one, that's well over a double, so great there. But also, too, I had a couple dogs, one just recently that rebonds. So I was feeling a little bitter about that. So to clean up the balance sheet, to make up for the rebonds fucking nightmare disaster problem, I just blew the whole fucking position out on this thing. Now, with this full double booked, I basically got my rebonds money back. And my rebonds, whatever's left of that piece of shit, thank you, Mr. Draper, it's free stock. Because when I sold this on a double, I try and keep all my bets exactly the same size. I got my rebonds money back. Anyway, kind of a funny anecdote. Regardless, even if it wasn't, I would be leery about looking for further price appreciation on this thing. You can see the gap really was established from these lows, and you could really make the argument the gap was from up here. But my hunch is we get up into these areas, and all the people that bought in here are like, fuck, just get me out, get me out, get me out. Also notice too, there's also this cheeky little funny little gap right there. So in essence, this is almost like an island up here. So it does make sense. We got up into this area that all of these people that took a shot here are finally like, okay, just get me the hell out of here. I'm out. I want done with this. Interesting story. They're in the liver treatment business. And from what I understand, the basic consensus on the street, analyst, all that kind of stuff is this thing's going to moon. The problem technically is this looks like Swiss cheese. So, like I said, I was given a treat here this morning. It made up for that stupid rebonds nightmare. I'm just going to call it a day. Like I said, I blew the whole thing out, and I'll come and re-examine this thing if we come back down, fill in the gap. Nice treat. Heading on over to the corn, as we've sort of talked about here recently, pre-evening pump, pre-evening dump. Which actually was extremely cliche, everyone. We won't see another halvening in Bitcoin for 4 years. But write this stuff down somewhere so that 4 years from now you go, I remember that Beamish guy said usually they dump her before the halvening event. So it did exactly what we kind of thought was going to happen. I think it happened a little bit closer to the actual halvening event than I was expecting, but nonetheless, it did dump ahead of the event. My basic message on the internet and for site people is I think we're doing something like this now. So this was the last halvening event, the pre-pump, the pre-dump. Halvening event happens here. So now we sort of have that pre-pump, pre-dump. Halvening event happens here. Where are we? There we are. And so that means, in my eyes, we're sort of like somewhere right in here right now. And believe it or not, actually, what I'm actually expecting is for us to do good old Mountain Man 61.8 fib retracements. That's exactly what this was. And then actually I expect the market to go actually a bit dormant. And then sort of setting us up for what happened last cycle. And what normally happens in markets is they never really move in one direction indefinitely. Usually it's like A, B, C, D's, right? So it's sort of like multi-moves. And that's sort of what I'm thinking here. A, B, sort of your initial dump, then a consolidation, then C, D, and that's the end of our move. And then also too, if we think end of June, beginning of July, Bitcoin does like to bottom about 2 weeks ahead of that event. Well, that would actually correspond really nicely with that dump about middle to the end of June. So the interesting thing here is I actually don't think there's going to be a hell of a lot that happens here over the next couple of weeks. If anything, it's a reprieve. Everybody should, take your profits. I was exceedingly pleased to hear from my little local buddies. We put together a fun little trading account at the end of the year. You can see that if we had just bought Bitcoin, great, we would have been up, then we would have been underwater, then we're up, and oh my goodness, this is crazy. So I do expect back and forth through the year. I think that's the hallmark of this year. But I was very pleased to see, we kind of fat-fingered the trade a little bit, but on balance, our little fund here locally is basically able to say that we have a 55% annualized rate of return for our account if we do absolutely nothing for the rest of the year. Sounds good to me. We're 100% in cash right now, and we're just going to cool our jets and just wait for the next setup. And really, that's how I would look at this if I was participating in the public, is we just had our very normal, very natural seasonal rally. We have insane volatility here right now. So what we have to do as professionals is wait for the volatility to come out of the market and set up our next trade. Hell, this might calm down and then actually set up a bullish setup. I don't know. But the long and short of it here right now is I got nothing. And if anything, I'm just sort of cooling my jets. Just let things settle down. And really, I like that idea for you too. Finish off today's free video with just a quick talk about alts. Really not a hell of a lot to get too excited about in alt land. I think I've told you recently that I'm actually thinking that the alt indexes can now start working their way back down, do healthy corrections, all that kind of fun talk. It is interesting to see how we held this little trend line here over the past couple days. And really, this is predicated on what does the junior market look like in this space. I'm not seeing a lot of like W's and oh my god, everything's face ripping up. But I am seeing some, uppy action. Kevin's idea here recently, this CND, caught my attention last night. If you are a trader, down, up, down, breakout, test the lows, and woohoo! There are ideas out there. Kevin, are you still watching this thing? I thought that was pretty impressive. So, you do it as you please. The good part about, of course, a lot of these names, actually the whole damn sheet, is that it's all priced in Bitcoin. So, obviously, if Bitcoin's topping out and correcting, these names are probably going to catch a bit of a bid. As I've told you yesterday, I would be inclined to be on the sidelines if I was quote-unquote trading these shitcoins right now through things like perp indexes. So I really wouldn't be doing anything, and I like an idea of a nice consolidation in here. And as I said, being the chicken shit guy that I am, I would be thinking reload zones here. Risk first approach, coming in on the buy side right here. That's a pretty risky proposition in my opinion. But one idea, and I see a lot of this kind of talk, what's value in this space? And of course, like I said, Kevin did a presentation today. What do you think the odds are that this double bottom down here just so happens to set up off of Kevin's favorite fib level? I'd say probably pretty good. Let's go see. Hello. After a while, this stuff gets ridiculous. So, Kevin was basically telling us today that he is very, very interested in this name as it's working its way down into this level. It does have a nice double bottom working. And this just happens to be off the Binance one. All these other exchanges, they have different things. But what was really interesting about this was Kevin was trying to explain to me, and keep in mind, I'm stupid, right? So I'm not smart at this. I'm now an old man, over the hill, all that kind of talk. So it takes at least 4 or 5 times for him to explain this stuff for the old man to really understand. And I don't think I quite understand it yet, but I'm trying. But if I understand correctly, we're actually starting to get into areas now where you can set up these master nodes, and they're going to cost you a certain amount of money to set up the services online, like cloud services, and there is a base cost towards setting those up. And we're starting, this one has a relatively consistent yield, which I think is really important in this space. But again, I'm not an expert on this. I'm just sort of reiterating what Kevin said. And if you want to come on the Daily Brief and watch what he explained today, I thought it was great stuff. But it's really interesting how we're now getting into very sort of, the price of these assets can't go much lower because then the master node actual break even is underwater. I thought that was a really interesting tell because I've been wondering for the longest time, how do we figure out what the cost of production is for a POS coin? So this is something that I'm thinking about here. And the fact that technically we're starting to get into quote-unquote value areas, basically cost of production to keep this idea going. And, here's 88.6, here's double bottoms. I mean, the chart speaks for itself. Obviously, we're at or below reload zones. So if you start seeing divergence and W's and stuff, I found it fascinating that these are the kind of names where you could probably sneak in here as we bottom out, pick up these master node things, sell half on a double, get your original capital back, and you got yourself an income generator for the rest of your life, as long as this blockchain idea keeps working. And Kevin was saying that their plan, of course, is to run apps off of these blockchains that will be used online. The interesting thing, though, is once those apps actually hit the market, I guarantee you these prices will not be this low anymore. So this is the kind of thing where you have to sort of anticipate the future. Am I coming in on value? What's this story going to look like? It's Barry Silbert's story, so I think it's got a half decent fundamental backing. And like I said, Kevin did a fantastic presentation for everybody today. So, food for thought. I don't have a buy signal here, but I'll tell you, we're starting to get into some very compelling levels. So, chew on that, if you will. All right, I think I'll leave the presentation at that. Hope you enjoyed it. My apologies for the shill right up at the top. But we do have this really cool promotion going. I was really proud of the team to really take TRI to the next level. Just solid presentation here. And these reviews. And this is our community. You don't pay anybody to do this stuff. And man, what a glowing review. It's just beautiful work. Thank you, David. Really appreciate the hard work you put in here. All right, everybody. Have yourselves a wonderful rest of your day. All the best, and bye for now.